afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, Wednesday, October 16th, where we saw small caps take the lead once again.
Russell 2000 getting up near an all-time high. Not that long ago, we were talking about it as a laggard indexed, but yeah, good day for small caps. Wanted to take a look at CBOE, the exchange operator, also in the software group Waystar, W-A-Y, and then PACS group, P-A-C-S, in a very strong industry group.
Okay, we will take a look at those stocks, but first, let's take a closer look at the major indexes. Here's the Russell 2000, which you mentioned, showing a lot of power yet again today. Strong 4 days here now for small caps, adding another 1.6% or so to the gains today. We also saw the S&P 500 up about 0.5% today, making up some of Tuesday's losses. We also saw the NASDAQ up about 0.3%, a nice little upside reversal there, finding support at the 10-day line, and the Dow up about 0.8%. Let's get more analysis from you, Ken, on the Russell here. Small caps finally, are they going to get out of their rut here of all this jagged back and forth action? Looks like we could be close to that.
Yeah, well, I'll tell you, yesterday I mentioned in the big picture column, the Russell 2000 was up 1%, and then by the end of the day, it was up less than 0.1%. So it wasn't a great session for small caps Tuesday, but Wednesday here we have a close near highs, and I think if you look at IWM, the Russell 2000 ETF, the volume that came with today's nice 1.6, 1.7% gain, probably going to be a little bit higher than what we saw the prior session. So small caps looking quite good here. 4 up days in a row. You can see it has fully cleared that recent high of just over 224, 225. And now, like I said, you have small caps vying for an all-time high here. So this bull market continues to find new gears and still looks pretty good here.
Yeah. So here's a monthly look at IWM. You can see a lot of previous congestion from 2020 and 2021 around that 230 level. So it looks like, Ken, that's the next stop.
Yeah, and we'll see if it drifts lower. It could bump into some resistance that you just pointed out there, and if it does, we just get an orderly low volume decline that could set up a nice breakout. The market is so strong that small caps might just shoot to an all-time high. But after 4 straight games, maybe it just drifts lower here and then goes for for another breakout.
Okay. Next on the list, let's check in on the S&P.
Yeah, S&P 500, we mentioned it suffered a higher volume decline yesterday. It wasn't a fun day. Semiconductor stocks, sold off. It was a distribution day, but, pretty good gain. Nice rebound today after, finding support at the 10-day moving average. So didn't get a whole lot of volume on the NYSE today. You can see it looks like it's going to be a lower volume rally, but S&P 500 still, fighting a real good fight up here and looks good as it holds short-term support levels.
Okay, and the tech-heavy NASDAQ, we're above 18,000, we're above 1817 and 18,327. Some levels to keep an eye on, Ken. We know it's not as strong as the S&P, but your thoughts on how this one is acting this week?
It had a hard time getting going today. It certainly lagged the Russell 2000 by a wide margin. You can see it was up 0.2%, 0.3%. But semiconductor stocks tried to rally back after the drubbing they took yesterday. But I'm looking at SMH basically ended flat on the day, so that held the Nasdaq back a little bit. But again, not really hard to find anything wrong with the Nasdaq's setup here. It hasn't fully gotten going, and it hasn't really been a powerful breakout at this point, but it's holding above that recent high of 18,327, still sitting just below an all-time high here, holding the 10-day line.
Okay, and the Dow. Blue chips, we are still right at highs here, Ken.
Yeah, Cisco got a nice upgrade in the Dow today. That was one of the top performers. So the Dow Jones and the S&P 500 right up near all-time highs. Really, all four indexes now are up near all-time highs. The Dow and the S&P were the first to move into new high ground. We'll see if the Russell 2000 and Nasdaq can follow suit.
Yeah. Okay, that we will. Let's move on and take a look at some sector ETFs right quick before we get to those three stocks. Here's XLU having a great week, up 3.7% for the week, with today's gain of nearly 2%. Looking pretty impressive here, Ken. This is that AI picks and shovels story continuing to unfold here for the utilities sector.
Yeah, XLU we put in the leaderboard model portfolio back on August 13th. It's been a nice winner. The utility stocks got a good bid today. They've been outperforming for a while, but the big news today was that Amazon.com is investing $500 million, expanding their footprint in nuclear. They're going to be working with Dominion Energy, which is ticker D. This is a utility stock to develop small modular nuclear reactors. And these are things that can actually be built and then shipped to a data center or big office building and provide nuclear power. So this is big news. The headlines continue to be pretty bullish around these utilities as data centers proliferate around the country, and just tremendous outperformance. Big day for Dominion Energy, and out of the S&P 11 sectors tracked by S&P, utilities was definitely the best performer today.
Yeah. And this outperformance has been notable for a number of months, Ken. And we talked about the recent pullback potentially creating buying opportunities, and it looks like it's done just that.
Yeah, I mean, with our strongest performers, with the best relative strength ratings, some of these stocks when they initially break out, they don't come down to their 50-day moving average. That's the red line. They'll come down to short-term support levels. A lot of them, the 21-day exponential moving average. That's exactly what XLU did. So came down, showed some tight closes last week, and now has started to move above the 80 level. So probably a more aggressive buy at this stage of the
Yeah.
game, but certainly people that bought around 72, 73 when it initially broke out probably had good reason to increase their position a little bit recently when XLU started to rally off the 21-day line.
Yeah. And we also wanted to check in on XLF because it's been a big couple of days for financial stocks with earnings season getting underway more and more and continuing to see some nice outperformance from this sector.
Yeah, U.S. Bancorp, nice earnings report. USB had a nice breakout today. The breakouts in the financial sector have just been really all over the place. We have American Express in the Dow is going to be reporting Friday. We've got a lot of regional banks going to be coming out Friday as well as next week. So we've talked about this market rally that has really expanded to include a lot of different sectors, but the financials have just been, super impressive. XLF, broke out recently, so we'll see what American Express has to say on Friday. I think we're going to hear from Fifth Third Bancorp regional bank as well. So still lots of earnings reports to come in the
Mhm.
financial sector, but just a great area of leadership right now in the market.
That it is. And notable broadening, I would say, of participation in this bull market here, Ken.
Yeah, it's interesting. I read something from Barron's that the B of A October survey of fund managers, they found that this hit the bullish sentiment hit the highest level since June 2020. We had the latest reading from Investors Intelligence, which is a survey of newsletter writers, that went up to 57.6. So we got two sort of sentiment indicators that are starting to show extreme bullishness. And when the crowd starts to get very bullish, that can be the time when maybe see a pullback. So just kind of keeping the sentiment indicators in the just in focus right now. Not ready to say we're going to pull back here, but when you get excessive bullishness, which we're not there yet, but starting to see signs of
Yeah.
excessive bullishness, probably usually a time to start playing a little defense. But just a great up day for the market, and again, lots of good action underneath the surface.
Yeah. Okay, let's check out CBOE for the radar here, setting up in a flat base, a depth of only 7% here, Ken. So a very orderly digestion here for the stock,
Yeah.
CBOE.
Yeah, I love the way the weekly chart is set up here. Technical analysis doesn't have to be a real complicated process. When you see a stock, breaking out into new high ground, how does it handle those gains? Is it volatile? Does it reverse lower and trade erratically, or does it just kind of digest those gains, trade in orderly fashion, and come down to a key support level like CBOE? So this is a really nice setup here. Company that's delivered strong earnings and sales growth for quite a long period of time. Excellent fundamentals here. Nice test of the 10-week moving average as a new base takes shape. So another stock that still has the potential to lead here, I think.
Yeah. Okay. So with earnings coming up in 16 days, so say, Ken, this does get above an early entry within the base or even break out ahead of earnings, is that enough time to get a profit cushion, or what would you be doing?
Yeah, I mean, it says it's let's see, 16 days away. Is that
Mhm.
what we
So
have? Yeah,
November 1st. So it's
so there's a little bit of time
yeah,
to build a profit cushion here. I think our general rule is that if you own a growth stock and it's ready to report earnings, you do want some
yeah,
profit cushion because the growth stocks can trade a little more volatile. Again, if you were to take a position ahead of earnings, maybe it's a small position to start. I don't think this is ready yet. Tried to break out over a trend line today, reversed slightly lower, but overall the technical picture is intact here. If you wanted to take a small nibble, 2-3 weeks ahead of earnings, you could probably do that. But that's the risk right now is what these earnings reports are going to look like as they start to roll in. So,
yeah.
good setup ahead of earnings, and we'll see what it looks like after earnings.
Yeah. So on this market surge chart here, it says 16 days, and that is calendar days. So if you
Calendar days, yep.
take out the 2 weekends, that's about 12 trading sessions that we've got.
Yeah, yeah, and there's some time here, so we'll see if CBOE can break out of this downtrend. Like I said, it tried to today, came up a bit short, but we'll keep an eye on it.
Next on the list, let's look at WAY. This is Waystar. Recent IPO in the medical software group went public in June at an IPO price of 21.50. It's currently trading around 27.75 as it works on a new base here, Ken. So new merchandise out of the medical software group.
Yeah, this is another compelling aspect of this uptrend is that we're seeing some IPOs really start to act well, and you see Waystar came public over the summer. This is healthcare. Software for the healthcare field came public at 21.50. Now it's up around 27.75. So it is a whippy stock. It's prone to some volatile swings, but if you look at the weekly chart here, tends to smooth out the day-to-day volatility. And similar to CBOE, this is another example of a stock that performed well post IPO. And look at what it's doing. It's just kind of moving sideways and building really a nice-looking flat base here, holding support at the 10-week line. So this is another technical setup that looks good here. Definitely want to pay attention to the recent IPOs and new issues. Like you said, this new blood is really the lifeline of a lot of bull markets. So find some of the newer companies still in the early stages of moves, and I think Waystar fits that bill.
It sure does. And then we're going to round things out with a look at PACS. This is PACS Group. Similar situation, medical sector, but this is the long-term care group. This one went public in April at 21. It's now at 41. on the verge of a breakout here, Ken. We've been talking about this stock in recent sessions as it's bounced off of the 50-day line, presenting a potential early entry, and it's added to the gains.
Yeah, sort of a common theme among the three stocks that we're talking about today. PACS, another new issue. You can see came public in the spring, $21 a share. It's more than doubled, and so not only has it held these gains, had a nice reaction to earnings when they reported in August. And again, the weekly chart here shows the stock right at the top of a little consolidation here, up for 4 or 5 days in a row. So maybe wouldn't be surprised to see a little low volume pullback here. Very very strong group. These provider of nursing care facilities. We have Ensign, a group here, ENSG on leaderboard. So it's a really, really strong group filled with a lot of price performers. So besides ENSG, PACS, PACS, a new issue worth watching here.
Okay. Well, thank you so much, Ken. And thanks to everyone for tuning in. That is it from us for today. But coming up live at 5 p.m. Eastern, 2 p.m. Pacific, our weekly Investing with IBD podcast is going live. Host Justin Nielsen will be joined by Mark Minervini, a fan favorite out there, two-time U.S. investing champion and founder of Minervini Private Access. Also, Shapiris, portfolio manager at O'Neill Global Advisors, will be joining that duo. So that's coming up live at 5. Mark is going to be talking about his strategies for how to leverage your portfolio in a volatile market. I think he's calling volatility a comet in the sky for this market. And I don't know, it does seem like we've been seeing a lot of rocket ships out there lately, Ken. The animal spirits are alive and well in this market.
Oh, no question about it. I'm trying to think back, in recent memory where we've seen a bull market where, there's just been so much pronounced strength in a variety of industry groups. It didn't seem like it was that long ago when we were talking about, the magnificent seven stocks, really the only thing that was working in the market, and that has totally changed here. So whether it's, home builders, utility stocks,
Yep.
hospitals, a lot of stuff outside of tech that's working, quite well here. So reasons to be encouraged, and but again, we're right at the start of Q3 earnings season, and hopefully there'll be a lot of good earnings reports that will keep this uptrend intact.
Yeah. Okay. So we'll get thoughts from Mark on the podcast here in a bit. And we have more for you tomorrow morning on IBD Live, investors.com/IBD Live for all the details on our daily morning live stream where we are breaking down the market action in real time, stocks on our radar. Even today, RKLB, speaking of rockets, that was one that we flagged for the audience, and I think it closed. How much did it close up today? RKLB closed up almost 13% today, Ken. So
Beautiful, beautiful move. Yep,
I
yep.
know. Beautiful indeed. So for more stuff like that, you can check out IBD Live at investors.com/IBD Live. We'll see you there. And then we'll also see you right back here tomorrow after the close.